Bitcoin is at a major inflection point, currently just below $58,000, and all the action comes down to the $59,000 to $60,000 region. And I guess the billion-dollar question is, what happens next? Is it bullish? Is it bearish? One thing I can tell you for certain is there's definitely a major trap which is currently unfolding, and on today's show we'll assess what that looks like and how you, the viewer at home, can avoid getting fooled like the masses. So smash the like button, hit the bell notification, and subscribe to the channel, and let's get immediately into the show, where we are seeing a little bit of relief here in the market on the hourly, the Banter Bubbles chart, showing pretty much every single coin within the top 100 bouncing on the hourly, and then the daily also showing pretty much the same thing. You can also see there is a little bit of a skewedness to what's happening within the market, in the sense that altcoins are outperforming. There's Bitcoin down negative 0.5% over there, and you have the likes of Pepe up 14%, Solana up 9%, PEPECOIN up 25% on the day. And even on the weekly chart, you are seeing some of the coins pulling back towards their weekly gains and attempting at least to turn back green over there. So PEPECOIN, Optimism, W, Stark, and then we have TRX, which are currently turning green on the weekly. As for the monthly, though, most of the coins continue to be red. So a lot to discuss on today's show, since we are at a major inflection point within the market. You can really view the market in two different ways. One is looking for long opportunities if a certain key level is reclaimed. And the second way is if there's a rejection from those key levels, you have to look for short opportunities. So let's get into it. What are the inflection points? What are the exact levels that we're looking at? And where are we within the cycle? We've spoken a lot about the diminishing volume, which tends to happen in a corrective phase. Now, I give slight edge to the bulls, just to give you full disclosure over there. I am very, very, very cautiously on a fine line, on thin ice, bullish, right? But that ice is cracking and we're about to fall through. So I'll show you where that whole picture begins to change, but marginal edge goes towards the bulls over here. Why? Well, we are still in a high time frame uptrend with high highs and higher lows, and we are kind of oscillating around the breakout level of the range high. You can see over here, we have it marked off on the chart, and I'll zoom in. We have bullish above the pink zone, bearish below, but we are below it, right? But we're not closed yet. We haven't closed the weekly candle. If the weekly candle starts to close above $60,000, well, you can see very quickly how a major bear trap would have unfolded over there. So currently we're putting in a little bit of a wick. If I just move the arrow up towards the right hand side over there, and you can see the 21 exponential moving average on the weekly time frame, which lines up with the green dash line. Now, put the green dash line there for a reason, which I'll show you why in just a moment. Now, this is the zone where you really have to pay attention, right? Until such time as you lose this 21 exponential moving average and you start to close candles below there on a high time frame, there is very, very slight edge that you have to give towards the bulls. Now, tying that in from the bearish case, if you do start to close below that, then this would start to look like a very high time frame deviation back into what was the old trading range. What is the old trading range? Well, you can see the pink line on the top is your range high, the pink line on the bottom is your range low, and then the thin line in the middle over here is going to be your mid-range. So in terms of a trade, I'm not going to go into too much detail. This was actually covered extensively last night on the first Whale School workshop event that we did. For anybody that was there, you'll know exactly what I'm talking about. For the rest of you who don't, well, make sure you attend those Whale School workshops, because we outlined two potential trade setups over there. So one would be, okay, deviation over there, deviation over there, back into the range, so you long it to the top side. When you deviate to the top side again, you shorted it back to the bottom side. So the same would be true over here. But since we're in a more macro bull market, any trades that happen over here in terms of a deviation, I would definitely not be targeting back to the all the way at the bottom of that range, but rather towards the mid-range over here. That's the deepest that I'd be looking for the correction to go. So going on to a lower time frame, we can kind of line this up over here, and you'll see this is exactly why I wanted to mark off the indicator with the dash line, because now you can zoom in and you can get a closer perspective of exactly what's taking place. We cap below here. If you see prices pushing up over here and beginning to reject, then it creates the opportunity to go short. Again, this is your trading range, right? So on the short side, you'd be trading from $60,000 down to about $45,000. Now, this would still be on par with what a bull market correction looks like. It would still be within the realm of normality if you did see prices come all the way back down. And even if it swept below that $45,000 level and then quickly reclaimed, this would still look like a macro higher low in the bigger picture. In the low time frame, of course, that would cause a lot of pain. It would mean a rejection from this level could still send Bitcoin down another 24%, which, as you would know, for altcoins would probably mean much more than that 24% level. So with that being said, what is the level that rules them all? Because it all comes down to one zone, which will flip things bullish once again. This is going to be the breakdown point over here, which I've marked off with this green line. If Bitcoin can get back above this key level over here, which currently is $60,656, that would get price fully bullish again. That was the breakdown level. So as price moves up into that level, this is where you can start to open up the possibility of taking both a short trade or a long trade. Below that level is the short trade. Above this level creates the opportunity for the long trade with stops below on the long side, and with the short side, stops would be at this green level. So if I bring up the actual trade setup, this is what it would look like. Let's just quickly grab it over here and put that on. Here we have it. Long trade and short trade. There it is. This is the trade opportunity. This is the way that I'd be viewing the market right now. One gives you a 1 to 3 risk to reward trade, longing the reclaim over here back to the top side. And you could, of course, if you break above that level, you could easily compound that trade using Fibonacci extensions to look for higher prices. If you reject from this level, well, then you could look for the short trade back down to the bottom of the range. But it's as I covered on the Whale School workshop last night, I said that when you're in a macro bull market, you want to short the market with absolute extreme caution. You don't want to be going up with massive size. It's better to play out the trade in your mind, paper trade this, say, well, that's the short trade, and rather allocate new capital as it comes into the bottom zone over here. That would become the buy the dip opportunity, as opposed to taking out high leverage positions and attempting to short the market. The simple reason for why I say that is because you don't want to counter trade the high time frame trend. Anybody who goes against the trend gets punished. I've seen it a million times before. There's been many large traders, people with massive views on both YouTube and Twitter. I'm not going to name who these people are, but ultimately shorting Bitcoin against the macro trend from $16,000 all the way up to $73,000. Please don't get wrecked doing that. You have a full funding reset, which has taken place within the market over here. Some of the coins even going negative in terms of funding, meaning that if you're holding long positions open, you would actually be getting paid to hold those long positions open. So this is very healthy for the macro bull market. You have a reset in the open interest, which has also taken place. Big reset coming from, dividing that open interest down into, at least on Binance, which is one of the biggest, was trading up to 40 billion, now down to $20 billion worth of open interest. You have the stock market, which is still in a little bit of trouble, having rejected from the key zone, same place as yesterday. And ultimately, this will be a driver of the market. And there is a chance that you're going to get one more sweep down low, which would do the same thing for crypto, right? We need the DXY to break down. The DXY breaks down, we'll start to see risk on assets moving up. As Kush shows over here, you had a failed bull flag breakout with a side of bearish engulfing. The bearish engulfing candle is a very powerful candle. You can see over there coughing up those gains over there on the daily time frame for the DXY, which is what caused that little bit of a bounce that we saw yesterday within the market. But macro wise, we really need to see the DXY break down in a much bigger way. We need to see it get below these levels. If you can start to break below the white box over here, which is 102, that will really drive a very powerful bull market for crypto, right? So pay attention to that. Also, the reclaim of the previous month's low, which is in alignment with the long trade setup that I've shown you over here. If you can start to get back above this 59 to 60K level, you'll be reclaiming last week's month low as well as the previous week's low. And on top of that, you will probably turn back up your stochastic RSI on the high time frame, which ultimately should give enough momentum for at least a very, very big bounce. Optimistically over here, we have seen a big reset in the fear and greed. We hit the levels that we were looking for yesterday. We said all major bottoms have been formed within this cycle between the 40 and the 50. Look at the levels over here. This was the USDC-D peg that occurred. The fear and greed went down to that 40 to 50 level. So we're hitting those same levels of fear again. This was when Bitcoin was trading over here around $25,000, and we just could not break that level down. A lot of people are viewing this as major resistance and said that we weren't going to break through. We sat in that 40 to 50 zone on the fear and greed for a number of months and ultimately grinded all the way back up. And again, we hit it in February, and then right now we've hit it once again. So that is all positive sign. Very, very good, right? This is exactly what we want to see within the market. I would even say if we could take it a step further and get into the 30 to 40 zone, which was also seen on the USDC-D pegs time, that would be extreme fear. And then you could look to counter that trade, right? So there it is. As per the alternative.me fear and greed over there, it is showing now officially moving from extreme greed, which was last month, into greed last week, very quickly from greed last week into now officially the fearful zone, which is a good sign. So we're looking for that reset. We're looking for the reversion of price back into the zone, which means it could go down as low as 51, right? Now, there's no guarantee that that will happen, right? Price could reverse from the $56,000 region, which is the area that we've hit. I said to you, my most probable outcome would be that we would hit $56,000, and my lower probability outcome would be that we'd get down as low as $48,000, possibly even a wick into $45,000. Now, that doesn't mean that you should be sitting there with 100% cash position waiting to deploy into the $45,000 to $46,000 region or the $48,000 region, but instead you should have a plan in which you're going to stagger your orders in alongside those levels, right? So you deploy bit by bit. As price hit 56,000, you would have deployed a little bit. As price loses and comes down into 52,000, you can deploy a little bit more. 48,000, a little bit more, and then decide when the whole macro picture changes completely would be if we started to hold below that $45,000 region, then you could cut the positions entirely. So you need to come with a plan. Again, we discussed this in Whale School last night, where I showed how you would calculate your position size and how you would scale into those positions. You don't blindly just bang your entire load of money in one go, right? So be careful of that. Last week's Wyckoff distribution schematic, which we were already discussing when price was up here at $67,000, and we said this was the most likely outcome, has essentially played out almost to perfection. Right now, we're currently in phase E, so just a very quick reminder of what that means. This is where supply takes full control. As you can see, price oftentimes comes back into the top side over here, which was the previous trading range low, and backtest that as resistance, and then failure to get back inside the trading range would open up the short opportunity, which is exactly what I've showcased to you guys over here. So failure to get back in the trading range over here and a rejection from that level shows you that supply is in control, and it means that you're going lower. But a reclaim of that trading range would invalidate the Wyckoff distribution schematic and instead can be viewed as a deviation of that range level. A deviation simply meaning a reclaim of that level, and consequently this move that has occurred over here could then be viewed as a shakeout. And it's bullish once again. So this is the inflection point, right? Very, very important inflection point where you need to pay a lot of attention. And I know for anybody that's new and inexperienced within crypto, this show might be very frustrating for you because I've given two scenarios. One is up, one is down. Very annoying for a newbie, but anybody who's been here for long enough will understand that that is exactly how trading works, right? You need to come up with multiple scenarios and plans, and you don't ever have one bias or find a way to give yourself confirmation bias. Instead, view the markets in two different ways. One would be, where does my analysis say things are bearish, and how am I going to execute on that plan if it does go that route? And another would be, where does my bias go bullish, and how would I execute on that plan if it is bullish? That is called having a line in the sand and sticking with the plan. So with that being said, let's continue on over here. You can see, again, lining up with that Wyckoff distribution, this was really the key point where we said things were starting to change. Our first and most notable warning sign was the break over here into this zone, which created a lower low. This showed you a massively weakening trend. And then on top of that, we had a lower high within this region over here. So starting to weaken the trend, lower high in relation to this area, lower low, that showed you there's something shifting. Price pushes up, rejects from the 50-day moving average, which so happens to be the mid-range. And so the Wyckoff distribution schematic is unfolding, right? So it's not over yet. Even though if we spike back up into this region over here, we could very quickly roll over one more time. And this is where the trap will come into play. The trap being that you're going to get shaken in and out of your position. Remember, we've spoken about this in the weeks leading up to this event. And we said that about 4 weeks ago, we said that the next 8 to 12 weeks are going to be designed to totally shake you out of the market. Do not confuse the short-term trends with the high time frame trend, right? The high time frame trend continues to remain up, and this continues to remain a macro bull market. But the correction phases can last in the region of 8 to 12 weeks, and the drawdown periods can be anywhere between 20 to 40% downside. Currently for Bitcoin, we've played out that 22% move. There you go, 23% move. So if it went the full route of 40% from top to bottom, what would that look like? Well, 40% could be all the way down, sweeping below that $45,000 level into 44,000. If that were to take place, I would expect it would only occur with a wick. I don't expect any closing candles to happen or to be confirmed below the 200-day moving average, which is currently situated around $50,000. So with that being said, any wicks that come into this area, I'm expecting to spike up very quickly. As it currently stands, my trading system is cautiously long, as I mentioned in the beginning of the show, but price needs to start to move very, very quickly. So from my side personally, I would like to see price reclaim this level very, very quick within the next 48 hours, invalidating the Wyckoff distribution or making it a very quick Wyckoff distribution whereby the level gets reclaimed and we go back bullish. If we start to spend a lot of time underneath these levels, my personal trading system is going to say, close all longs. I'll update you guys if that does become relevant. So far, we cautiously bullish. So let's continue on over here. The good thing over here is that the pivot levels are moving drastically lower with each passing day. Yesterday, the pivot level was somewhere around here at about $63,000. Today, it's dropped all the way down to $60,453, which is in alignment with that deviation, right? The reclaim of the range. If prices were to bounce back up and reclaim this level, you'd be breaking back above the pivot level. You'd be reclaiming the range low. That creates the long opportunity. Stop loss goes below there. Take profit 1 at the mid range. Take profit 2 at the range high. Leave 1/3 on the table in case of a greater breakout. And we will address that when the time comes, right? For now, just understand the trigger plan. Understand what you're looking at. You are still below the 200 EMA on the 1 hour and the 4 hour time frame, and you still have the cross between the yellow and the pink, which is the 9 and the 18 exponential moving average, is heading down. But it is a lot of support, right? We spoke about it yesterday and we've hit into those levels. So zooming in a little bit closer, we've come into that blue 100-day moving average. We have lost that, which has happened in the past, but we never spend a lot of time below that level. Usually caught between the 100 and 150-day moving average becomes a buying opportunity within the bull market, and that's exactly where price is currently situated. If you look at the MV 𝗕𝗢𝗢𝗣 score over here, which ultimately shows you what the average cost basis is of short-term holders. You can see that looks very similar to that 100-day moving average in the sense that we've hit that $57,700 level and we need to reclaim it as soon as possible. Otherwise, the short-term holders are going to start to puke out their positions, and that's going to lead to low prices. Using the bull market support band as well and zooming into current levels in terms of where we're at right now, we've just marginally missed that. In prior bull markets, we haven't always hit it. We come close to it and then price reverts back up in the same way that you saw over here. The point being is that this is usually a very good value zone for long-term entries, right? So if you want to learn more about this, remember we have actually already begun with Whale School. Ask your peers in the comment section how they've found Whale School so far. Unlock your full access. Join us. You have 6 days remaining. We've created an extension. It's up to you to catch up in terms of the modules that we've currently covered, but we are giving you guys a little bit of an extension, right? So it's a $3,000 course. You pay absolutely nothing because it's covered by these sponsors. Please use this link in the description below. Do not Google it. Don't go on Google and try search it. There's a lot of scam sites out there which are going to take your information and use it against you. So please go through to the exact link in the description below. There it is, Whale School. Click that over there. Also, by doing that, you'll see over here under GUMMY. There it is, all the way on the top. If you do join Whale School right now as well, you'll be eligible for the next GUMMY airdrop. The last select bunch that got into the GUMMY airdrop received anywhere between about $500 and $1,500 on that airdrop, depending on how you participate and how much you mine. So it's a great opportunity for you. There it is, Whale School, 6 days to go before we close off the signups for this cohort. Okay, let's continue. What else do we have over here? We're looking at a little bit of a potential short squeeze in the short term, and that's where the question remains. Will the short squeeze lead to price reclaiming $60,000? If it does, and they can sustain and defend that level, so we need to see price break up to $60,000, and then we need to see it not just get there and reject, but get there and ultimately hold that level. If you see something like that, while simultaneously the open interest drops off, and this spikes up, which is both spot and leverage traders, then you might have the opportunity for a major short squeeze. Why do I say that? Well, you can see as the open interest was picking up over here, it was short sellers which were driving price towards the downside, but spot was also selling, right? So we really want to see this turn around within the market. The bullish momentum has not yet come back, but that would be what it looks like if it did start to come back. Also, very quickly touching over here on high block capital, which shows you the liquidation levels. You can see we've come into the bottom of that trading range, which is where the yellow area has been lit up over here. That often leads to a reversion in the opposite direction. And now we have pent up liquidity in the form of stop losses over here. These are short sellers who have placed their stop losses at $74,000. If price comes into that zone, you're going to have a mass series of liquidations on the short side. And this is in agreement as well. If you look at the cumulative liquidation delta, it continues to remain negative. For those of you who have watched the show for a long time, you'll know exactly how we've seen this multiple times mark range highs and range lows within the market. So a lot of confluence taking place over there. You have ETH BTC chart, which is continuing to actually hold up above the key level over here, which is currently 0.050. I still want to see much more from ETH BTC in order to start to convert Bitcoin into Ethereum. It's not enough for me. And plus, the USD pair is still suffering in the sense that it's creating lower lows and lower highs. The old level to clear was this level over here at 3,560. The new level to claim is going to be this level over here at the white zone, 3,368. If bulls can get price above that level, then they have a chance of flipping the USD pair bullish again, and then this can be a deviation. The yellow zone is the mid-range, so you'd be deviating, reclaiming back above the mid-range, and then you can start to target higher prices on ETH USD. There is a possibility as well that sooner or later we're going to get a breakdown of the Bitcoin dominance. We're very close to the apex of the rising wedge formation over here, and we are now starting to actually lose the mid-range level, right? The yellow highlighted box over here is the mid-range level. Look at the wick over here into the top of that trend line, which has been a key pivot level. Rejecting from that level and losing this zone over here might be the first warning sign that we're breaking down on Bitcoin dominance. If Bitcoin dominance breaks down, ETH BTC is going to shoot up and altcoins should outperform the rest of the market, which is exactly what we said we're seeing over here when we looked on the daily time frame with the rest of the altcoins comparative to what Bitcoin is doing, which is this bubble over here, only up 0.43%. And look at what the altcoins are doing on this bounce. So let's see if they'll have enough momentum to get major follow through. When you look at total 3 as well, it has come pretty close to the 50% level, that being 50% of this overall range, which in bull markets are significant levels that you want to see held as support. So if bulls can take back control and get into the top half or the top quarter of this trading range over here, which is the yellow highlighted box, that's where they start to garner up enough momentum to mount an assault and break price out. Let's have a very quick look at that key $59,000 level to see if there is anything of interest. So we mentioned that this is the key level to break above. This is going to be around that $60,000 zone. So zooming in, we can have a look at the liquidity. We can see what's happening on the order book. Is there anything of significance, right? Nothing out of the ordinary, in my personal opinion. You can see there are some sell orders here. 86 Bitcoin coming in at 59,932. Not big enough. I'm looking for hundreds of Bitcoin sell orders. There's 132. If you see about 400 to 500 Bitcoin jumping into the order book on Trading Light over here, for the 𝗟𝗚𝗏 members, of course, I'll update you if that does happen. If that does take place, that could be an indication that we might be playing out the rejection, and then you're looking for the short trade opportunity over there. For now, that's not the case. Currently on Solana, I continue to remain long, basing off the range low over here as support. So focusing on the yellow areas, that's your range high. That's your range low, and we're looking for a bump and run scenario. So momentum is starting to cool off over here in the sense that you broke this massive upsloping trend line, but I'm giving slight benefit of the doubt based off what could be the next short squeeze, and then I'll reevaluate based on what Bitcoin does. But ultimately looking for Solana to hopefully push up here towards even $170. Okay, if it can't do that, ultimately expect it is going to roll over and possibly head as low as $80. So this is what I'm talking about. Major inflection point within the market, and you have a lot of work to do, a lot of focus that you have to put onto the table when it comes to making your trades. Other coins that I am watching in terms of longer term holds, Polkadot is one of them, right? Polkadot is an old coin, but they had a V2 update, which was announced at token 2049. There's a lot on the table over here, and I'm hearing some positive things. It is coming into the mid-range over here. At the end of the day, the chart will tell us the truth, right? So if they are able to defend this mid-range level at $5.94, and more specifically, if you start to see a reclaim above this zone over here at $8, right? That would start to show an incredibly bullish sign that this is ultimately going to be a macro higher low, and you can look at Polkadot heading into higher prices. So there is relative strength on some of the altcoins. You can always look at the good old squigglies, right? You'll have to follow some of the traders that cover this. I think Charlie BTC is one of them on Twitter that always shows the good old squigglies. You can see top performers, Render, Wild, you have Nia, Fetch, Tau, AGIX, Ocean, Filecoin not so much, but the others giving relative strength against Bitcoin. You have, there you go, Ondo, True Finance, TokenFi, we have a Dusk. Those are doing pretty decently over there. And then you can see over here on the right-hand side, look at where Total is, look at where Total 2, and look at where Total 3 is. This is showing you people are far right curving it in terms of their risk. They're now looking to allocate into altcoins on that dip. So if that is true, and we look at some of the potential performers, feel free, go and have a look at, if you look at Filippo Fracchini over here, he's given a full thread update of Gavin's talk from the Polkadot event that occurred at Token 2049 with their V2 update. We can also look at some of the other ecosystem plays, for example, like MOVR. Let's see how MOVR is doing as well in terms of a trade setup. Is there any positive signs here around MOVR? Okay. Let's just quickly line that up. So mover almost all the way back down to range lows over here. Did have an absolutely enormous move. The technology is still good. I would be looking for a little bit of a deeper correction over here first before I start to get any interest, but that might create an opportunity to look for a long. Let me quickly go through to see if there's anything else worth mentioning here before going into the other altcoins. Okay, GUMMY, still respecting and maintaining those range levels. There was a couple other ones that I was looking at. We've had our eye on PEPECOIN for quite some time. So at some point, I will be looking to make allocation into PEPECOIN. It's currently there you go. It's currently hitting the fair value gap, but I need to see more demand kick in for PEPECOIN before actually going long on this. BasedAI, let's have a look at that one as well. Okay, same thing. Hitting into the major support, I need to see more demand before going long on that. Do we have any other ones that we should be mentioning? Another one I was looking at is ROOST. Remember the hype around ROOST? ROOST had an enormous amount of hype around here. And I told you guys, be careful with the new technology coins. Be careful with the newly listed coins. These can ultimately sell off 50 to 70% before finding a rounded bottom. And here it is. This is going to be the level to clear, giving you the 4-hour perspective. I really want to see price break and hold above 0.026. And I'd be interested in allocating into a ROOST position, right? Let's see. Any other ones that are worth mentioning on the DEGEN list over here? Okay, I see Tucker had an absolutely enormous move. Apparently run did a spaces and they the people actually caught on to what's going on here with this coin. So because of that, you got a big move up. Respecting the levels, right? That's your range low. Holding in at that 0 point, you can round it up. It's about 4 cents. Holding at 4 cents, pushing up towards 10 cents is going to be the range high. And that is the level that you want to see broken above. So quickly looking at the majors, I just want to have a look over here to see anything else of interest. How's Atom doing? Okay, so Atom almost hitting those range lows. Maybe it's going to be front run. If it is, the reclaim of the mid-range over here opens up the long opportunity back into the range high. But then you expect the rest of the market to bounce. I wanted to look at ZETA as well, which got absolutely punished. There you go. Hitting those range lows, right? So theoretically, that opens up a long opportunity. Stops go below the recent lows. If these levels can be defended, this is where you're seeing a shift now within the altcoins, right? Forming secondary high lows. TON, which is high up on a lot of people's list. We know that this is one of Run's top picks. Maybe if you see him saying he's buying, please tell him to watch the show and tell him not to buy yet. I don't think it's time. I think you will eventually see this come all the way back down into this $2.88 zone. And that's where I'm going to be interested, around $3, right? Around $3. I see you guys are asking for DEGEN. Let's have a look at DEGEN. Okay, let's just type it. It's going to be quicker. DEGEN. Let's grab it over here. All right, DEGEN. Let's have a look at DEGEN. That's a 4-hour time frame. Let's go into the daily. All right, DEGEN. So, of course, starting to distribute over here. This was the old range level that needed to hold. At the end of the day, this is lower lows and lower highs. And now you do face the reality that price may revert all the way back down. So your next major and key level of support, of course, is going to be coming in over here. I'm not saying that it's definitely going there. On a low market cap coin that's newly listed, it is always very, very difficult to make the determination of what it's going to do next. That could mean another 68% down, which is actually normal when it comes to these newer coins, right? You see extreme volatility for one of the top performing assets in the world, right? If you're looking to play the far right side and you're expecting 10,000% returns in short order, expect that volatility is the price that you're going to pay for those types of gains. It doesn't come free. So if you want the big upsides, you are going to get huge, huge dumps. You just need to control your risk when it comes to making these plays. So a reminder, guys, join 𝗟𝗚𝗡 School. Again, you have 6 days left. Use the link in the description below. You can also claim your sign-up bonus once you join 𝗟𝗚𝗡 School using one of the links in the description below. I think that's it from me. Let's cut it off over there and not make it too long. It's do or die time. $60,000 is the level to reclaim. We'll check in tomorrow and see what happens next. I'll catch you all on the next one. Please smash the like button and cheers for now.